What happens when cheap Chinese EVs threaten to replace an entire national auto industry? In Brazil, it has triggered shockwaves. 22,000 vehicles arrived in just one shipment, and Chinese imports now make up over 80% of EV sales in the country. Behind the scenes, an escalating backlash from Brazil's auto workers, delayed promises of local factories, and a government caught in a high-voltage tug-of-war. In this video, we will break down all the details from US and EU tariffs to China's strategic pivot, Brazil's tariff dilemma, and the global stakes of this EV power play. Stick around, hit the like and subscribe button for updates, and let's get into the details. China's flood of cheap electric vehicles into Brazil is not a coincidence. It is a calculated strategy. After steep tariffs in the US and Europe, Chinese carmakers like BYD have zeroed in on Brazil, Latin America's largest economy, as their next big prize. In fact, BYD recently sent the world's largest car-carrying ship, capable of holding 20 football fields worth of vehicles, to dock in Itajaí port, marking the fourth such shipment this year. Around 22,000 EVs have already arrived. Brazil's relatively low 10% import tariff on EVs has created a unique opening, one that Chinese automakers are exploiting aggressively. Brazil's main auto association projects a 40% increase in Chinese EV imports this year, pushing Chinese market share to nearly 8% of total light vehicle registrations. Industry insiders warn that this flood could seriously damage Brazil's domestic manufacturing base, cost jobs, and hollow out local investment. BYD and others have promised to build factories in Brazil, but delays and a lack of local supplier contracts raise red flags. And this is not just about Brazil. It is about how China responds to global trade barriers. But how did China's auto strategy shift so quickly, and how much is it working? When the US slapped a 100% tariff on Chinese EVs and Europe followed with duties up to 35%, many expected Chinese automakers to hit a wall. Instead, they rewrote the playbook. Rather than retreat, companies like BYD, Chery, and Geely shifted focus from fully electric cars to plug-in hybrids and gasoline models, which are not subject to the same high duties. They also redirected exports toward markets with weaker local competition like Brazil, Italy, and Spain, where homegrown EV brands have less grip. In April 2025, Chinese EV sales in Europe surged by 59% year-over-year, while Tesla's plunged 49%. BYD even outsold Tesla in Europe that month, a seismic shift. Meanwhile, sales of Chinese plug-in hybrids skyrocketed by 546%, helping Chinese brands capture nearly 10% of Europe's hybrid market. Brazil is now seeing this same strategy unfold. China is flooding the country with competitively priced EVs while the tariff window remains open. These are not just random exports, they are part of a refined, adaptive strategy forged under global pressure. And now, as Chinese EVs pour into Brazil, the backlash from industry insiders is starting to boil over. China's approach is multi-pronged. It is not just EVs. Companies like Meituan are investing $1 billion to launch delivery services in Brazil, while retail powerhouses like TikTok Shop and Mixu are entering the market aggressively. These moves come as US-China trade tensions drive Chinese firms to diversify, and Brazil, with its openness and demand, is the perfect landing pad. At the same time, China and Brazil have tightened their economic ties. Bilateral trade has doubled over the past decade, and in May 2025 alone, Chinese companies pledged $4.7 billion in Brazilian investments, spanning mining, renewable energy, and auto manufacturing. President Lula's friendly ties with Beijing add to the momentum, especially as Brazil gears up to host the COP30 Climate Summit this November. China sees Brazil as both a strategic ally and a high-growth market. But with such rapid expansion, what risks and cracks are starting to appear in China's bold Brazil play? For all its momentum, China's Brazil push is facing real problems. BYD's delayed factory timeline raises concerns about hollow promises and job creation delays. Similarly, GWM, another Chinese automaker, pushed back its production schedule at a former Mercedes-Benz plant. Analysts note that despite the excitement, Brazil still lacks the EV supply chain infrastructure to compete with Chinese imports. The country has lithium and rare earth minerals, but not the giga factories or local component makers. There is also public skepticism. Many Brazilians are wary of a flood of foreign imports eroding domestic brands. Some regulators worry that China's ultra-low pricing model could become predatory. This echoes what happened in Europe, where steep tariffs pushed Chinese automakers to switch strategies rather than scale back. China's ability to shift from EVs to hybrids and gasoline models in response to tariffs proves its manufacturing speed and flexibility. But critics say it also undermines global climate goals and local development. So where does this all lead? What's next for Brazil and China in the EV era? Brazil is now at a turning point. On one hand, Chinese EV imports are rapidly modernizing the market. On the other hand, they threaten to undermine Brazil's long-term green industry by delaying local production and job creation. President Lula's administration is reviewing proposals to accelerate tariff hikes to 35%, a move that could protect domestic automakers, but risks straining Brazil-China relations. At the same time, Chinese firms are racing to establish deeper roots before the tariff window closes. BYD plans to begin Brazil-based production by late 2026, and GWM is working with over 100 local suppliers to ramp up output. For China, Brazil is more than a trade partner. It is a showcase. If they can dominate here, they can replicate the model elsewhere in Latin America and beyond. But public opinion, labor unions, and a growing industrial backlash may complicate that vision. In the coming months, Brazil must choose: double down on foreign investment or clamp down to build its own EV future. Either way, the battle for Brazil's auto market has only just begun. In the end, let's take an overview of the details from today's video. China rerouted its export firepower toward Brazil after US and EU barriers. BYD and others flooded the market while delaying factory build-outs. Brazil's industry leaders are demanding urgent tariff hikes to stop the bleeding. Meanwhile, Chinese firms are pouring billions into energy, mining, and tech across Brazil. It is a fierce collision of affordability, global ambition, and local survival. What do you think? Is China getting close to dominating the global EV market, leaving the US behind? Could a flood of foreign cars crush Brazil's dreams of industrial revival? Comment below. Hit the like and subscribe for more updates. See you in the next video. As waves of Chinese EVs roll into Brazil, local automakers and labor unions are raising red flags. The influx, driven largely by BYD and other Chinese giants, now makes up over 80% of Brazil's electric vehicle market, according to the Brazilian EV Association, ABVE. That dominance did not come from local investment, but from sheer volume of imports taking advantage of Brazil's low 10% EV tariff. Labor groups like Industrial Brazil are accusing China of dumping vehicles into the country without contributing to long-term job growth. BYD's promised factory in Bahia has faced serious delays, with no signs of local supplier contracts or production groundwork. Originally set to start operations in 2024, it's now postponed to late 2026, following investigations into labor abuses. Meanwhile, Brazil's main auto association, Associação Nacional dos Fabricantes de Veículos Automotores, is calling on the government to immediately raise import tariffs to 35%, ahead of the 2026 schedule. The fear is simple. If action isn't taken now, Brazil's domestic auto industry could be permanently sidelined. This is not just economic. It is about sovereignty, jobs, and the future of Brazil's manufacturing strength. With pressure mounting, why does Brazil still seem so open to China's aggressive EV push? Brazil is not just another export market. It is the crown jewel of Latin America. With over 200 million people and the sixth largest auto market in the world, the country is a goldmine for Chinese automakers and tech giants, looking to expand beyond increasingly hostile markets in the US and Europe.